What lies ahead for the Indian economy? Hello everyone. Welcome to the Isle of Knowledge. Today, we will discuss the key reasons for the sudden depreciation of the Indian currency. How this will affect the Indian financial industry. What all is to expect, and what the future holds for the Indian economy. The economy of India is extremely important to the world. India is the world's third largest economy in terms of purchasing power parity, and it is home to nearly 1/5 of the world's population. Over the last few decades, India's economic growth has accelerated, thanks to reform efforts and the expansion of its aspirational consumer class. However, things began to change with the COVID pandemic. And within the already ongoing situation, the Russia-Ukraine crisis has added fuel to the fire. To prevent the rupee from falling, the Reserve Bank of India made its largest ever spot market sale in March 2022, selling $20 billion. However, the rupee remains on a fling path. On the back of a stronger dollar and weaker than expected domestic data, the Indian rupee fell to a new record low against the US dollar in July 2022. The Indian rupee is currently at its lowest point in the last 5 years. Meanwhile, out of India's total external debt of $620 billion, over $200 billion are going to be due in the coming months. The decline in foreign exchange reserves could make things more difficult for India. Will this be a watershed moment for the Indian economy? Is the Indian economy on the verge of a recession? How will India deal with this situation? Let's have a look. What caused the drop in Indian currency? The value of a currency, like any other good or service, is determined by aggregate supply and demand. Interest rates, inflation, capital flow, and money supply are some of the key factors that influence the supply and demand for a country's currency. So, what caused the fall in the Indian rupee? In fact, there are few reasons behind the depreciation of Indian currency. The interest rate increase by the Federal Reserve is one of the key reasons. Interest rates in the US have been at an all-time low for many years. Therefore, investors didn't invest in dollar-denominated assets. Instead, they invested their money in other countries, where they would earn handsome returns. However, an increase in interest rates by the Fed changed the shift. Dollar-denominated assets are now yielding a decent rate of return, making them more appealing. As a result, investors began to sell their assets in emerging markets in order to free up funds for dollar-denominated investments. This causes almost all emerging market currencies to lose value in recent months. Investors are estimated to have withdrawn 2.3 trillion rupees from the Indian economy in the first half of the year 2022 itself. Overvalued equity is widely regarded as another major reason for the fall in Indian currency. Indian banks had been under pressure for some time, due to high non-performing loans on their balance sheets. In the meantime, the Reserve Bank had to raise interest rates to combat inflation. A combination of the above factors would ideally cause equity prices to fall. In contrast, the prices of Indian stock markets have consistently increased. Many investors believed it was a bubble. Making matters worse, their investments are valued in a currency that is rapidly depreciating, which amplifies investors' panic. As a result, assets denominated in Indian rupees, both debt and equity, have lost their appeal to foreign investors. Final outcome was a massive sell-off. Country's huge current account deficit is another key reason. Contributes to the rupee's depreciation. India's current account deficit has increased to $190 billion in March 2022, from $102 billion years ago. Higher fuel prices and other imports are going to increase the trade deficit further in year 2022. What lies ahead for India? Given its size, India is inherently vulnerable to global structural changes. So, it is reasonable to expect occasional ups and downs in its economy. Furthermore, regulating fiscal and monetary policies is a monumental task for a country like India, particularly in light of challenging global market conditions. Despite the odds, there are many reasons to believe in the imminent recovery of the Indian economy. Here are some of the most promising economic growth prospects for India. Reason number 1. The country's biggest asset, its people. It is the world's second most populous country, with a large young population. Besides its size, the Indian youth are well educated. Its favorable demographics are complemented by its wealth of natural resources, widespread use of English, and undeniable entrepreneurial spirit. Reason number 2. Thriving middle class. If India achieves its predicted total consumer spending of $13 trillion by 2030, it will be the largest consumer market in the world. In the coming years, the Indian economy will generate enormous domestic demand. While export-led growth would be preferable, rising domestic demand will benefit the country's expanding manufacturing and service sectors. Growing private sector will push the economy forward. Yes, in the short to medium term, controlling inflation and managing fiscal and current account deficits are going to be challenging. However, India's medium to long-term growth prospects remains bright, as the private sector is expected to drive capital formation and job creation for the rest of this decade. Prospect number 4. Ever-growing IT sector. The last financial year has been a watershed moment for the Indian information technology industry. For the first time in history, the Indian IT sector added $30 billion to its economy. India now has over $200 billion worth of information technology industry. Going forward, the IT sector will provide more and more employment and foreign currency to the Indian economy. Reason number 5. Blessings in disguise. The increase in fuel prices has put a pressure on the country's import bill. However, potential future contracts between Russia and India to purchase oil at a favorable rate will benefit India in the long run. In addition, the Russia-Ukraine conflict is opening up an unexpected opportunity for certain Indian agricultural exports, like wheat, maize, millet, and processed foods. Reason number 6. Possible currency pair to relieve pressure on rupee. If India decided to go ahead with the rupee-ruble arrangement, and if an alternative to SWIFT can be found, the move away from dollar-based trade will relieve pressure on the rupee. What do you think about the long-term prospect of rupee-ruble arrangement? Please let me know your thoughts in the comments section. Prospect number 7. India to remain a hot destination for FDI. Even with the temporary outflow, India will continue to be an attractive destination for foreign investments. Its large and rapidly growing consumer market, expanding banking network, availability of skilled labor, and various fiscal incentives will attract foreign investors. India possesses all of the potential for economic success. However, breaking free from the constraints of the past is required to realize this brilliant future for the home of 1.4 billion people. Thank you for watching. Please consider subscribing, liking, and sharing, which means a lot to me. I love to see your thoughts in the comment section.